Hello everyone, welcome to my channel SW Metro official channel.
Finally, an arrest warrant has been issued on Kody for non-payment of a bank loan. Kody for his prolonged and deliberate non-payment of a substantial bank loan, marking a significant escalation in what has been a long-standing legal battle between the borrower and the lending institution. This development comes after months, if not years, of missed payments, ignored court summons, and failed negotiations, leaving the bank with no choice but to pursue criminal charges against Kody for what appears to be a blatant disregard for financial obligations and legal consequences. The issuance of an arrest warrant is not a step taken lightly by any judicial system, as it signifies that all other avenues for resolution have been exhausted, and the debtor has either refused or been unable to comply with court orders mandating repayment, thereby forcing the authorities to intervene in a more severe manner to uphold the rule of law and protect the interests of creditors who rely on the enforcement of contracts to maintain the stability of the financial system. For Kody, this arrest warrant represents a dramatic and potentially life-altering moment, as he now faces not only the immediate threat of incarceration but also the long-term repercussions of having a criminal record, which could severely impact his ability to secure future loans, find employment, or even maintain personal relationships, given the stigma often associated with financial fraud or default. The case itself is a textbook example of how financial irresponsibility, or, in some interpretations, outright defiance, can spiral into a full-blown legal crisis, as Kody's initial failure to meet repayment deadlines likely started as a series of overlooked due dates or temporary cash flow problems but gradually escalated into a pattern of avoidance, evasion, and, ultimately, legal defiance, with court documents suggesting that he repeatedly ignored formal notices from the bank, skipped court hearings, and may have even attempted to conceal assets to avoid seizure, all of which contributed to the judge's decision to issue an arrest warrant as a last resort. Financial experts analyzing the case have pointed out that while loan defaults are not uncommon, particularly in times of economic hardship, what sets Kody's situation apart is the apparent willfulness of his non-compliance, as most borrowers facing genuine financial difficulties will at least attempt to negotiate revised payment plans or seek debt restructuring rather than outright ignoring their obligations, making his actions appear less like an unfortunate victim of circumstance and more like a deliberate attempt to defraud the bank, which explains why the legal system has responded with such severity. The bank, for its part, has remained tight-lipped about the specifics of the case, citing confidentiality policies, but insiders suggest that the institution had been unusually patient with Kody, granting multiple extensions and offering various repayment options before finally resorting to litigation, only to be met with further resistance, leaving them no choice but to escalate the matter to criminal proceedings in order to recover the owed funds and send a clear message to other borrowers about the consequences of similar behavior. This raises important questions about the broader implications of the case, particularly in an era where personal and corporate debt levels are at historic highs, and financial institutions are under increasing pressure to balance leniency with accountability, as too much forgiveness could encourage reckless borrowing, while excessive harshness could push already struggling individuals into deeper financial ruin, creating a societal dilemma about where to draw the line between compassion and justice. For Kody, the immediate future looks grim, as an arrest warrant means that law enforcement officers are now authorized to take him into custody at any moment, whether at his home, workplace, or even during a routine traffic stop, turning his life into a state of constant uncertainty and fear until the matter is resolved, which could involve either finally settling the debt, though at this stage, that may no longer be enough to immediately dismiss the warrant, posting bail, or facing a trial, where he could be sentenced to jail time depending on the severity of the charges and the judge's discretion. Legal analysts have noted that while imprisonment for debt is rare in many jurisdictions, it is not unheard of in cases where fraud or willful evasion is proven, meaning Kody could very well end up behind bars if the court determines that his actions were intentional rather than merely negligent, a distinction that will likely be the focal point of any upcoming legal proceedings. Beyond the personal consequences for Kody, this case also serves as a cautionary tale for other borrowers about the importance of taking financial obligations seriously and engaging proactively with lenders at the first sign of trouble, rather than resorting to avoidance, as the legal system has little patience for those who disregard its authority, and the repercussions can extend far beyond damaged credit scores. Additionally, the situation highlights the critical role of legal enforcement in maintaining trust within the financial system, as banks rely on the ability to recover loans to remain solvent and continue lending to other customers, meaning that when a borrower like Kody refuses to pay, it doesn't just affect him and the bank, it indirectly impacts other borrowers who may face stricter lending criteria as a result of increased risk assessments. As the story continues to unfold, many will be watching closely to see whether Kody finally takes responsibility for his debt or if he continues to fight the charges, potentially setting a precedent for how similar cases are handled in the future. One thing, however, is certain: the issuance of an arrest warrant in a loan default case is a rare and serious measure, signaling that the courts have lost patience and are prepared to use the full force of the law to compel compliance, serving as a stark reminder that financial obligations are not merely suggestions but legally binding commitments with real-world consequences for those who choose to ignore them. Whether this case will lead to broader reforms in debt collection practices or simply stand as an isolated example of extreme enforcement remains to be seen, but for now, Kody's predicament underscores a fundamental truth in both finance and law: that accountability is inevitable, and evasion, no matter how prolonged, is only a temporary delay of the inevitable reckoning. Kody for his prolonged and deliberate non-payment of a substantial bank loan, marking a significant escalation in what had previously been a contentious but largely civil dispute between the borrower and the lending institution. This development underscores the severe consequences of financial irresponsibility and the lengths to which banks and the judicial system will go to enforce contractual obligations, particularly in cases where repeated warnings and negotiated settlements have been ignored or outright dismissed by the debtor. Kody, whose financial dealings had previously flown under the radar despite mounting suspicions of deliberate evasion, now finds himself at the center of a legal maelstrom that could result in not only significant financial penalties but also potential incarceration, depending on how the courts choose to interpret his actions, or lack thereof, in repaying the debt. The issuance of an arrest warrant is an extraordinary measure, typically reserved for the most egregious cases of financial fraud or willful default, suggesting that authorities have deemed Kody's behavior not merely negligent but actively deceptive, raising questions about whether he ever intended to honor his financial commitments or if this was part of a broader pattern of fiscal mismanagement and exploitation of the banking system. The loan in question, reportedly amounting to a sum large enough to warrant such aggressive legal action, was initially extended to Kody under the assumption that he possessed both the means and the intent to repay it in accordance with the agreed-upon terms, which included a structured repayment schedule with clearly defined deadlines and interest rates. However, as months turned into years with little to no progress in settling the debt, the bank was forced to initiate a series of increasingly severe measures, beginning with formal notices of delinquency, followed by threats of legal action, and ultimately culminating in the freezing of Kody's assets in an attempt to recoup some of the lost funds. Despite these efforts, Kody either refused or was unable to comply, leading to the bank petitioning the courts for an arrest warrant on grounds of contempt, fraud, or possible embezzlement, depending on the specifics of the case, which remain partially shrouded in legal secrecy due to ongoing investigations. The court's decision to grant the warrant indicates that judges found sufficient evidence to suggest that Kody's failure to pay was not due to unforeseen financial hardship, a scenario that often elicits more lenient treatment, but rather a calculated disregard for his obligations, a distinction that carries far graver legal implications. This case also raises broader questions about the efficacy of the banking system's safeguards against loan defaults and whether enough is being done to vet borrowers before extending large sums of money, particularly in an era where digital transactions and online lending have made it easier than ever for individuals to secure financing without undergoing rigorous scrutiny. Had Kody's financial history been more thoroughly examined, would the bank have detected red flags that could have prevented this situation? Or does the fault lie entirely with Kody, who may have deliberately concealed his inability or unwillingness to repay? Furthermore, this situation highlights the delicate balance that financial institutions must strike between maintaining profitability and mitigating risk, as aggressive lending practices can sometimes lead to scenarios where borrowers become overwhelmed by debt, triggering a cascade of legal and financial repercussions. In Kody's case, however, The sheer duration of his non-payment and his apparent indifference to the bank's demands suggest a level of intentional defiance that goes beyond mere financial distress, leading many to speculate whether this was an isolated incident or part of a larger pattern of fraudulent behavior that could implicate him in other financial schemes. The repercussions of this arrest warrant extend far beyond Kody's personal predicament, serving as a cautionary tale for other borrowers who might be tempted to disregard their financial obligations, whether out of arrogance, desperation, or outright malice. In an economy still recovering from the shocks of global financial crises and pandemic-induced instability, lenders have become increasingly vigilant and litigious in pursuing delinquent accounts, signaling a shift toward a zero-tolerance policy for loan defaults that could have sweeping implications for consumer borrowing practices. For Kody, the immediate future is bleak. If apprehended, he could face not only civil penalties designed to forcibly extract repayment but also criminal charges that might result in probation, fines, or even imprisonment, depending on the jurisdiction and the severity of the offenses alleged. Moreover, his creditworthiness will be irreparably damaged, making it nearly impossible for him to secure loans, mortgages, or even basic banking services in the future, effectively rendering him a financial pariah in an increasingly credit-dependent society. From a legal standpoint, this case could set a precedent for how similar situations are handled in the future, particularly if Kody's defense attempts to argue that his default was due to circumstances beyond his control, such as sudden unemployment, medical emergencies, or other legitimate hardships that typically warrant more sympathetic treatment from courts. However, given that the bank pursued an arrest warrant rather than simply a civil judgment, it is likely that they possess compelling evidence of deceit or malicious intent, such as falsified income statements, hidden assets, or a history of similar defaults with other lenders. If proven, these allegations could transform Kody's case from a simple matter of debt collection into a full-blown criminal trial involving charges of fraud, perjury, or even money laundering, depending on how creatively prosecutors choose to interpret his actions. The mere existence of an arrest warrant suggests that law enforcement views this as more than just a financial dispute. It is potentially a criminal matter warranting state intervention, which elevates the stakes considerably for all parties involved. For the bank, this aggressive legal maneuver is likely motivated by a combination of financial necessity and strategic deterrence, as allowing high-profile defaults to go unpunished could encourage other borrowers to follow suit, thereby eroding the institution's profitability and stability. By making an example of Kody, the bank sends a clear message to its clientele that non-payment will be met with the full force of the law, a tactic that may restore confidence among shareholders and depositors but also risks backlash from consumer advocacy groups who argue that such measures disproportionately target individuals who may genuinely lack the means to pay. This tension between creditor rights and debtor protections is a long-standing debate in financial law, and Kody's case may reignite discussions about whether the current system leans too heavily in favor of banks, particularly when they have the resources to pursue lengthy and expensive legal battles that most individuals cannot hope to match. On a personal level, Kody's downfall serves as a sobering reminder of the perils of financial overextension and the importance of honoring one's debts, not only as a matter of legal obligation but also as a cornerstone of personal integrity and social responsibility. Whether his actions were born of desperation, greed, or sheer recklessness, the outcome is the same: a life upended by legal troubles, public scrutiny, and the looming specter of incarceration. As the case unfolds, it will undoubtedly attract media attention, further magnifying the consequences of his choices and potentially influencing public perception of debt, accountability, and the justice system's role in mediating financial disputes. For now, however, the issuance of an arrest warrant against Kody stands as a definitive moment in a saga that is far from over, one that will likely serve as a landmark case in the ongoing dialogue about debt, responsibility, and the limits of financial forgiveness. The case itself is a textbook example of how financial irresponsibility, or, in some interpretations, outright defiance, can spiral into a full-blown legal crisis, as Kody's initial failure to meet repayment deadlines likely started as a series of overlooked due dates or temporary cash flow problems but gradually escalated into a pattern of avoidance, evasion, and, ultimately, legal defiance, with court documents suggesting that he repeatedly ignored formal notices from the bank, skipped court hearings, and may have even attempted to conceal assets to avoid seizure, all of which contributed to the judge's decision to issue an arrest warrant as a last resort. Financial experts analyzing the case have pointed out that while loan defaults are not uncommon, particularly in times of economic hardship, what sets Kody's situation apart is the apparent